Welcome back to Wealthy and Well, where finance meets personal harmony on Wealthy and Well. I'm Mason, your guide to viewing finances through a holistic lens. Today, let's delve into the current landscape of the Canadian economy, specifically focusing on the Bank of Canada rates. I'm here to break down some of the recent developments and, more importantly, talk about how they might affect your personal harmony. The financial world was taken by surprise when the Canadian economy showed an unexpected contraction in the second quarter. Instead of expanding by 1.2%, as many had predicted, it contracted at a rate of 0.2%. Now, what's more concerning is that this slowing momentum is forecasted to continue into the third quarter. For those who closely follow predictions from the Bank of Canada, this performance is quite divergent from their recent forecast. The heart and soul of any economy, consumer spending, saw a significant deceleration. From a robust 2.4% growth in the first quarter, spending volume softened to just 1%. Now, for our listeners who enjoy dining out or booking a weekend getaway, this might resonate deeply. The hospitality sector, once buoyed by the reopening of the economy, is now witnessing a decline. On the positive side, it appears many Canadians are embracing a renewed sense of frugality. The savings rate rose from 3.7% in the first quarter to 5.1%. This gives a ray of hope. It's crucial to realize that in uncertain times, having a safety net like savings is like having an anchor during a storm. Here's where things become a bit troubling. Housing, often seen as an indicator of economic health, contracted at a rate of 8.2%, marking its fifth consecutive quarterly decline. This rate takes us back to the unsettling times of 2020 when the pandemic brought everything to a standstill. But not everything is bleak. Businesses seem to be making significant investments. They expanded at a robust 10.3% rate, diversifying their funds in non-residential construction and machinery. This shows resilience and a forward-looking mindset, doesn't it? Net exports didn't paint a rosy picture, pulling down the GDP by 0.5%, spelling some challenging news for the Canadian dollar. With the Canadian economy, even with the boost from immigration, clearly underperforming compared to the United States, potential repercussions for the Canadian dollar are evident. This underperformance can lead to investors becoming wary, potentially influencing the foreign exchange market. Moreover, such economic disparities might also have ripple effects on trade and investment decisions between the two countries. If our daily videos are becoming your go-to for all things wealthy and well, show some love by hitting like and subscribe to always stay updated. Now, moving to a broader perspective, one might ask, what should the Bank of Canada do now? The figures speak for themselves, with real final demand showing its weakest performance since the fourth quarter of 1995. There's a clear signal here. It seems to be a call to pause, reflect, and possibly re-strategize. Perhaps it's time for the bank to reconsider its rate hiking strategy. Wealthy and Well isn't just about understanding financial data. It's about discerning what these numbers mean for our lives, our families, and our future. As we reflect on the current Canadian economic landscape, let's remember that the true essence of wealth is not just about accumulation, but about striking that harmonious balance in every aspect of our life. Until next time, stay wealthy, stay well, and keep finding that balance.